Excitement spreads quickly. A new startup, a sudden IPO, a cryptocurrency surge, a viral trade. Flash captures attention. But attention is not the same as wealth. Wealth rarely announces itself in real time. It accumulates quietly. The assets that build lasting financial stability are often unremarkable. Utility companies, water treatment facilities, logistics networks, rental housing. They don't trend. They don't dominate headlines. They operate. And operation is what compounds. The financial world rewards spectacle. Spectacle attracts participation. Participation increases volatility. But volatility is not the same as durability. Durability is boring. Consistent cash flow, predictable demand, stable contracts. These characteristics don't generate excitement. They generate returns. A power grid does not need hype. It needs reliability. A water utility does not need attention. It needs usage. Infrastructure serves necessity. Necessity produces recurring revenue. Recurring revenue compounds. This is the quiet advantage. While markets chase momentum, infrastructure collects payments. While traders react to headlines, rental properties collect rent. There is no applause for stable yield, no viral posts about consistent dividend payments. Yet over long horizons, stability outpaces spectacle. The psychology of investing favors stimulation. Fast gains feel intelligent. Rapid shifts feel strategic. But speed introduces error. Error erodes capital. Boring assets reduce emotional interference. They are predictable, operational, underwhelming. Underwhelming assets rarely inspire impulsive decisions, and emotional restraint is an edge. Owning something dull means you are less likely to overreact, less likely to chase, less likely to panic. Boring ownership fosters patience. Patience fosters compounding. The loudest wealth stories often involve risk spikes. The quietest involve infrastructure. One is dramatic, the other is durable. Durability wins over time. Consider this. Every city depends on power, water, waste management, transportation. These systems operate regardless of market sentiment. They generate revenue regardless of trends. Owning pieces of necessity changes your relationship with volatility. Instead of betting on movement, you collect from function. Function is constant. Excitement fluctuates. Infrastructure persists. And persistence compounds. The quiet advantage of owning boring things is simple. They don't demand attention. They demand patience. And patience is rarely celebrated. But over decades, patience accumulates more than hype. Wealth that lasts is rarely thrilling in the moment. It is repetitive, operational, predictable, which is why most people overlook it. They chase what feels dynamic while ignoring what functions steadily. And steady function is what builds dull wealth. Understanding this shifts your focus from chasing spikes to owning systems. Headlines reward movement. A stock surges 40%. A company triples in a year. A new sector disrupts an old one. Movement creates narrative. Cash flow creates stability. There is a difference between price and income. Price moves, income persists. A volatile asset can feel powerful when it rises, but if it does not generate cash, its value is dependent on someone else paying more later. Cash-flowing assets operate differently. They produce income regardless of daily price swings. Rent arrives monthly. Dividends are distributed quarterly. Infrastructure contracts pay annually. The return is not dependent on excitement, it is dependent on usage. Usage is more reliable than speculation. People need housing. Businesses need electricity. Cities need logistics. Necessity sustains revenue. Revenue sustains cash flow. Cash flow can be reinvested. Reinvestment compounds. Compounding prefers consistency over drama. If an asset pays you regularly, you do not need to guess its future popularity. You measure performance by yield, not by attention. Yield changes how you think. Instead of asking, "Will this spike?" you ask, "Will this continue?" Continuation builds stability. Stability builds scale. Headlines are short-term. Cash flow is structural. Short-term movements are amplified by media. Long-term payments are often ignored. Yet over decades, consistent yield outperforms erratic surges for most participants. Volatility attracts emotion. Cash flow attracts patience. Emotion leads to reaction. Patience leads to accumulation. Owning a boring, income-producing asset may not impress anyone, but it does not require constant decision-making. Decision fatigue is costly. Reaction is costly. Overtrading is costly. Cash flow reduces the need to act, and reduced action often preserves capital. Preserved capital compounds more effectively than capital repeatedly interrupted. Cash flow also changes risk perception. If an asset temporarily declines in price but continues paying income, your exposure remains productive. You are not relying solely on appreciation. That reduces psychological pressure. Psychological pressure leads to impulsive exits. Impulsive exits interrupt compounding. Cash-flowing assets anchor behavior. They create rhythm. Income in, reinvest, repeat. Repetition builds dull wealth. It is not thrilling, it is mechanical. Mechanical systems scale reliably. Cash flow does not need to trend. It needs to persist. Persistence over time creates quiet advantage. While others chase headlines, you accumulate payments. Payments reinvested. Reinvestment compounded. Over long horizons, that structure becomes significant. The quiet advantage of boring assets is not just stability, it is predictability. Predictability allows planning. Planning allows discipline. Discipline allows compounding to work uninterrupted. And uninterrupted compounding builds wealth that does not require attention to survive. In markets driven by noise, cash flow is signal, and signal endures longer than hype. If this made sense to you, you already understand more than most people do. This channel exists for that kind of awareness. Like the video, subscribe. Nothing here is accidental. Infrastructure is rarely exciting. Pipelines, transmission lines, data centers, warehouses, rental housing, none of it trends. But all of it functions. Function is the foundation of durability. Infrastructure serves necessity, not preference. People may cancel subscriptions. They rarely cancel electricity. They may rotate brands. They still need water. They may shift platforms. Goods still move through logistics networks. Necessity creates steady demand. Steady demand creates recurring revenue. Recurring revenue creates predictable cash flow. Predictable cash flow compounds quietly. A warehouse does not care about market narratives. It cares about occupancy. A rental property does not care about hype cycles. It cares about tenants. A utility does not depend on sentiment. It depends on usage. Usage is structural. Structural demand reduces volatility in revenue streams. Revenue stability reduces behavioral error. Behavioral error is one of the largest destroyers of capital. Infrastructure assets often grow slowly, but slow growth sustained over decades becomes significant. A steady 4 to 8% return reinvested consistently outpaces dramatic spikes that collapse. The key variable is duration. Infrastructure assets are built for long time horizons, 20-year contracts, 30-year concessions, multi-decade depreciation schedules. Their structure assumes longevity. Longevity aligns with compounding. Short-term traders look for acceleration. Infrastructure investors look for continuity. Continuity builds wealth without spectacle. The market celebrates innovation. It depends on infrastructure. Every disruptive company still needs power, transportation, warehousing, connectivity. Infrastructure sits beneath trends. Trends rotate. Infrastructure remains. Owning underlying systems creates insulation from narrative shifts. If technology changes, power is still required. If consumer behavior evolves, goods still require storage and movement. Necessity does not disappear. The quiet advantage is not just stability, it is resilience. Resilient assets survive cycles. Survival allows compounding to continue uninterrupted. Interruption is expensive. If an asset collapses, compounding resets. If an asset persists, compounding continues. Infrastructure minimizes reset risk. Reset risk is rarely discussed, but it defines long-term outcomes. The fewer times your capital resets to zero, the more time can do its work. Infrastructure assets are rarely wiped out overnight. They may fluctuate. They may underperform temporarily. But their underlying necessity anchors value. Anchored value supports patient capital. Patient capital builds dull wealth. It is not dramatic, it is not viral, but it is durable. Infrastructure wins not because it excites, but because it endures. And endurance compounds. Boring assets do something unusual. They reduce stimulation. No dramatic price swings, no constant headlines, no urgent notifications. Less stimulation creates distance. Distance creates clarity. Most financial mistakes are emotional. Buying into momentum, selling into fear, chasing narrative, reacting to volatility. Exciting assets amplify emotion. They demand attention. Attention invites interference. Interference interrupts compounding. When you own something dull, a utility ETF, a rental property, a logistics REIT, there is less temptation to act constantly. The asset does not beg for reaction. It operates. Operation builds income. Income builds reinvestment. Reinvestment builds scale. Boring ownership removes the illusion of urgency. You are less likely to refresh prices every hour, less likely to compare short-term returns, less likely to panic. Patience is easier when nothing dramatic is happening. Drama invites ego. Ego invites error. In speculative environments, identity attaches to outcome. Wins feel personal. Losses feel threatening. Threat triggers reaction. Reaction disrupts process. Boring assets rarely threaten identity. They rarely promise brilliance. They simply perform. This detachment becomes an edge, because markets reward consistency more than intensity. If an asset yields steady cash flow and modest growth, your role is simple. hold, reinvest, repeat. Simplicity reduces decision fatigue. Decision fatigue reduces mistakes. Mistakes compound negatively. Avoiding large errors often matters more than capturing every spike. Excitement increases variance. Variance increases risk of misjudgment. Dull wealth narrows variance. Narrow variance stabilizes outcomes. This stability compounds psychologically as well as financially. You become less reactive, less dependent on external validation, less tempted by sudden narratives. Emotional neutrality is powerful. When you are not emotionally attached to volatility, you allow time to work uninterrupted. And uninterrupted time is the core advantage. Boring assets protect you from yourself. They do not promise speed. They promise continuity. Continuity is the foundation of compounding. While others chase spikes, you accumulate quietly. Quiet accumulation rarely draws attention, but it builds stability, and stability, sustained long enough, becomes significant. The quiet advantage is not just financial, it is behavioral. Owning boring things reduces the emotional noise that destroys wealth, and silence allows compounding to continue. Most people are taught to look for excitement, fast growth, breakout potential, the next disruption. Excitement feels intelligent, movement feels productive. But wealth rarely depends on adrenaline. It depends on repetition. The strategic shift is subtle. You stop asking, what could explode, and start asking, what will still be functioning in 20 years? That question filters differently. You begin prioritizing cash flow over headlines, stability over speculation, usage over popularity. You look at assets that serve necessity: power grids, transportation networks, data infrastructure, rental housing, broad market index funds. They don't promise overnight transformation. They promise durability. Durability gives time room to work. When you own a system that produces recurring income, you reduce dependency on prediction. You don't need to guess the next trend. You need to ensure the system keeps functioning. Functionality compounds. Compounding rewards patience more than brilliance. This is the quiet advantage. While others rotate through narratives, you hold exposure to necessity. While volatility spikes, cash flow continues. The returns may look modest year to year, but modest returns reinvested consistently become significant over decades. Boring wealth does not impress in the short term. It dominates in the long term. And because it lacks spectacle, it attracts less competition. Less competition often means steadier pricing. Steady pricing reduces behavioral error. Over time, your portfolio becomes less reactive, less emotional, more mechanical. Mechanical systems scale reliably. You stop chasing moments. You start owning processes. That shift is quiet, but it changes trajectory. Because once you anchor your capital to systems that endure, you stop depending on excitement to create returns, and you begin depending on continuity. Continuity compounds. If this changed how you think about wealth and excitement, subscribe for more breakdowns of how durable systems build quiet advantage. Like this, if you prefer stability over spectacle. This channel isn't here to sell excitement. It's here to clarify structure. And structure is rarely flashy, but it lasts.